Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Danny Akuye, along with
Juliet Siley. Well, we had a good day in the end, Danny. About a 0.4% gain. Really just the turnaround after the inflation data, I guess.
Absolutely. So the market really took a positive spin off that CPI data, and we might just get a quick check and see where the SIBO 200 is closing. About 0.4%, and we can see it, can't we, Jules? At about 11:30, the market decided that it'd become positive.
Go for a bit of a run, yeah. Go for a bit of a pre-Easter run, and of course that's the other big theme, isn't it? That the end of month, the end of quarter, all this positioning happening ahead of the key inflation data in the US as well. But speaking of our own inflation data, let's get to the three themes. Steady as she goes. Inflation still at this two-year low in February, 3.4% on the year versus expectations of 3.5%. What does all this mean for the RBA?
Absolutely. And I think there are growing concerns that, you know, inflation could remain a little bit sticky. I was just checking earlier, Jules, to see what the little Aussie battler, aka the Aussie dollar, was doing, and it did sell off after the CPI result, but actually it's recovering now. So the big movement will probably be, if there is any movement, with the PCE on Friday with the US, because that is the inflation gauge that the Fed looks at.
Yeah, absolutely. And just looking as well in terms of some of the stock moves, and it was a positive day, but platinum asset management actually plunged something like 20%. This is after, was it an investor just basically pulled something like $1.4 billion of funds from the company? That'll do it.
Yeah, it sounds like it's probably a big institutional fund that they have, and they've pulled it. And, you know, it just shows how brutal the investment management space is. And Coco goes loco. Exactly. Have you stocked up on your Christmas bunny eggs?
No, but I just stocked up on the ones that our boss Kylie bought us. I've eaten a fair few at the moment. I feel a bit sick, actually. I probably shouldn't have had about 4 chocolates before I came on air. But yeah, that's incredible. Copper now more expensive. Cocoa more expensive than copper, and its rise faster than Bitcoin, above $9,000 a ton. So doubling so far, or in the past 12 months or so.
Exactly. And yes, that is certainly, along with a few other foods that have got really expensive. Did you know cabbages were selling for $18 a cabbage?
I saw your piece yesterday. I don't often buy cabbage, but I should, given my Dutch roots. The Dutch love a bit of a cabbage.
Well, maybe not at $18 a cabbage. Let's have a look at some of the sectors and see how healthcare traded. And in the green today with CSL, the major biotech, up by 1.3%. Also some love there for Ramsay and Ansell. And let's check the second page. No, we don't have a second page.
Industrials, Transurban pretty flat, Brambles, Computershare, Seven Group all looking good, Worley up 1.3%. So Seven Group a bit of a turnaround after it sort of slapped that independent investor yesterday on that Boral rejection.
Absolutely, and the industrials are pretty much green on screen, but down at EDI are looking like the winner in that sector, up by about 3.7% today.
Okay, looking at consumer staples, I mean, this is really interesting on that duopoly as well. Speaking of rising food prices, Woolies and Coles both looking good. Macquarie has upgraded both of those. Treasury Wine Estates having a little bit of a flat day, and Endeavour and Metcash looking good. And worth noting, because I just did a deep dive into this sector, it's had a bit of a shaky start to 2024, down about 3% on the year so far. Yeah,
it's a lot to do with the 6 inquiries into oligopoly status, but I think Peter Dutton slammed the nail down on the Nationals last night on splitting the companies up. So according to Rudy Philippek Van Dyke in our special Diamonds and Duds series, which is out now, you can check out what he thinks about Woolies.
All right, let's have a look at some of the stocks in focus. Mesoblast, I mean, it had such a good session on the NASDAQ. Oh, somebody sneezed very loudly out there. And in our market yesterday, the US FDA giving the green light to its phase 3 therapy data, saying it can support resubmission for serious complications in children following stem cell transplants.
And just checking in on that Platinum Asset Management, and shares falling 21% after news last night that they had lost that $1.4 billion mandate from an undisclosed client.
Mining stocks, we did have iron ore, of course, in Singapore take a bit of a tumble during yesterday's trade. A bit more stability today. Fortescue going one way, Rio the other.
And Woolies leading the consumer staple stocks were the best performing sector, and Woolworths was up 1.73%.
All right, welcome to the COB, Rocco Panzerino from Macro. Rocco, what are you talking about today? I haven't had a quick look.
Market risks.
Market risks.
Market risk, yeah. There's a couple of rounds at the moment, although in saying that things are looking quite positive in the shorter term. Interest rate expectations remain at the forefront of our minds. Look, we've finally got a little bit of clarity on what's going to go on, specifically over in the US. But with a lot of this optimism around interest rate cuts, any changes to that can hurt markets. Obviously, things are starting to get a little bit more rosier on the back of Jerome Powell and his comments saying that they can and will reduce rates in 2024. And as it stands, the most likely scenario is that in the second Fed meeting from now, there will be a 25 basis point cut. And this is standing at about a 70% chance currently. In saying that, obviously, the waters are finally clearer, but we do have a little bit of a path. And what we're seeing is that potentially we're anticipating 3 rate cuts for this year and a target rate of 3.1% by 2026. On the other hand, we also have geopolitical tensions. And with geopolitical tensions, I had a look at the UBS Family Office report, the most recent one for 2023. And geopolitical tensions are actually the biggest concern for most family offices across the world. Firstly, it goes geopolitical tensions, then recession, and then inflation as a global average. But it's interesting to note that in North America, this differentiates to recession being the main concern at the moment. We've had increased fragmentation across the global economy as well, with China and the US and even China and Australia. And with this greater fragmentation, it damages a lot of the global growth as well, which we can expect throughout this year. So there's been a lot of emphasis, and a lot of these family offices are reallocating a lot of their funds to emerging markets. We've dabbled in some Indian ETFs with IIND, which has performed really, really well over the past year or so. And there's even some Australian listed companies, predominantly based in India, like FND, Findy, Digital Transaction Solution Company, which has gone up about 560%
Wow.
just in the last 6 months.
Wow.
It's been on a stellar run and doesn't look like it wants to cool off. So yeah.
Interesting. Value buy, Woolworths. We've been talking about Woolworths today. So what's your take on it, Rocco?
Yeah, Woolworths had a strong day. A lot of the negative press, there's been a lot of negative press on the stock and also a poor result in their most recent report. We've seen the share price drop about 20% from its recent highs. So having a look back at the longer term chart at Woolworths and looking back to around 2008, where the share price has acted very similar to it has now, when there was inquiry with the ACCC into competitiveness across the industry. They recommended changes in that inquiry, but it had very little impact on earnings. Now, as a result of this, the Woolworths share price actually nearly recovered all of those losses within a couple of weeks. It came right back up there. We've also obviously had the resignation of Brad Banducci and the appointment of Amanda Bardwell. This could prove beneficial. She's been working within the company for 20 plus years and was a key contributor to a lot of their growth and their earnings over the past 10 years. But Woolworths has the highest consumer stickiness or loyalty compared to its peers, and has shown the ability to actually pass through a lot of these inflationary costs to their members with very little impact, unlike a lot of the others. The stock is trading historically quite low to its average since 2018, and Goldman's themselves actually see this a value entry level for a high quality and defensive stock. And if you're thinking long term, I think it's a great addition to the portfolio around these levels.
All right, Rocco, it's Easter. Will you be buying a cabbage or chocolate?
Chocolate for me.
Okay, all right. Happy Easter.
A chocolate-coated cabbage. Gosh, imagine how that expensive that might be. Oh dear. And the stock of the day, well, it wasn't a stock, it was cocoa prices. David Novak from Wealthwise Education and Michael Gable from Fairmont Equities share their take on the call.
But you see, this is the irrational sentiment at the moment. I mean, this is traders get on the back of this. Futures traders, and they just go with it. And so it's uncertain. But when you see a chart like this, there's no clear indication of what the top is going to be until you see a major reversal. So, it's unpredictable. I mean, look at the chart. That chart goes back, well, what are we looking at there? Right?
2002.
20 plus years.
Yeah.
Right? So you can see over the last 20 plus years, I mean, it's only more recently that this has taken off. So what's the likelihood, in my view, about this remaining elevated is probably unlikely. But then, I wouldn't be certainly going against this trend at the moment, but you don't know where the top is.
So you'd be riding it.
Yeah, well,
Michael,
traders
what
would
about
be.
you?
Yeah, with these, so this is basically a trend that's become parabolic. So at this stage, it becomes almost impossible to know, is it going to double again from here or triple again from here, or will it go down? But the one thing that we can say with these parabolic trends is I think almost every time you get a parabolic trend, it only ends one way.
Yeah.
Right.
And that's by coming down just as quickly. So you don't get a situation where something goes up sharply like that and then it takes a breather by heading sideways for a while. So whether you're looking at sort of Bitcoin over the years, the ARK ETF, tulip prices, whatever it is, anything that moves up in a straight line, eventually will come back down. Maybe not in time for Easter this year, but at some point.
So you wouldn't be in that at all?
Oh, look, I'd be taking profits along the way.
Selling out.
But as soon as you see it give back maybe 10, 20%, that's not your chance to jump in, because it'll drop a lot more than that. It may drop 80%.
Okay. All right.
Okay, let's have a look at the market leaders. On a very positive day, 2 days out from the Easter break, Polynovo, I mean, they're not particularly impressive gains, are they? But
No,
2
they're
to
not.
4% gains there coming through. Johns Lyng looking pretty impressive. Core Lithium up as well, but just not showing on our screen today. Let's go to the laggards today.
Yeah, and have a look. Waypoint REIT. Actually, a few of the REITs under pressure today, including not only Waypoint, Homeco, Daily Needs, Charter Hall, a Longwell REIT. So maybe ironically reacting to potentially, I don't know, higher interest rates, Incitec Pivot and Premier Investments, which was very strong yesterday off the back of their results, and the upcoming 2025 divestment or sell down of Smiggle, and that was down 2.75% today.
All right, let's have a look at the smaller end of town. Bubs had a great day, up more than 17%. Botanics Pharma, Aravella Therapeutic, Veeam and Archer Materials all rising.
And how many of those do we know about?
I know what Bubs does.
Yeah, exactly. Some of the laggards, Lease Energy down 9%, Centurious Metals, 29 Metals, they're getting slammed literally by huge storms up in Northern Australia, off by almost 8%. And Next Science off by about 6%.
Yeah, and 29 Metals, I think I had at least 2 broker downgrades today on the back of those. Let's have a look at what is happening overnight. The Bank of England meeting minutes, also US mortgage applications data. Carnival Corp reports its earnings, and over in Europe, a 10-year bond auction in Italy.
There we go. Hopefully nothing too scary in that. Now let's have a look at tomorrow here in Australia. Private sector credit, retail sales. I didn't realise we've got retail sales. New Zealand consumer confidence. Oh, and we've got a couple of stocks. We've got Leo Lithium and Vulcan Energy Resources reporting earnings, and ex-dividends, Australia Clinical Labs, Sigma Healthcare and West Gold Resources.
All right, let's have a quick look at the final movement on
You're
the
ready
market.
to go off for Easter, aren't
I
you,
am.
Jules?
Tessa just left, one of our producers, and I was like, what? How come you get to go to more early? But then I remembered she doesn't work Thursday, so good for her. Up 0.4% on the SIBO. 0.4% on the ASX 200 as well, 7,814. So really a very positive session after that CPI print. As you said, it's all that movement after 11:30.
And I'm just having a quick peek because it looks as though the ASX 200 is back above that 7,800 level, which we did crack through a couple of days ago, then fell down. And yeah, so we'll take it. But just remember, everyone, it is a triple or witching, well, effectively Thursday, with markets closed on Friday. So strange things start happening at the end of this week, month and quarter, or the beginning of the next one.
Yeah.
You know why, it's rebalancing.
Hard to believe we are almost in Q2. All right, we'll catch you from 9:40 Eastern tomorrow. Have a good evening.
Have a great evening.